Thank you.
Thanks again. Note also, for anyone that's registered with your full name, we will have a record of your attendance. There's no longer a need for verifiable CPD for our own members of the society, but we appreciate that there may be others joining us today that will require verifiability. And so on to the main topic of today's webinar. In February 2021, the European Commission presented its Europe Beating Cancer Plan, in which the Commission committed to working with stakeholders to address access to financial products for cancer. A right to be forgotten framework has been introduced in a number of other European countries and is under consideration in Ireland. Under an RTBF approach, typically an applicant for life insurance no longer needs to disclose their previous cancer once they've passed a period of time after completing their cancer treatment. The implementation of an RTBF framework could have significant implications for Irish consumers of insurance products. So in 2022, the Society formed a working group to address 4 broad issues. Firstly, to explore the advantages and disadvantages to consumers or groups of consumers of implementing such a regime in Ireland. Secondly, to understand the current position and experience for survivors of cancer who apply for life insurance products in Ireland today. Thirdly, to summarise how legislation has already been implemented in other European countries and any observed or expected impacts in those countries. And finally, to consider how any similar legislation in Ireland might impact actuaries, underwriters and claims assessors, including the practical, operational and systems issues. And the purpose of today's webinar is to launch the working group's paper. So I'm delighted to be joined this morning by 2 speakers. We have Julie McCarthy. Julie is the Deputy Head of Actuarial Function for Royal London, Ireland. She joined Royal London in 2018 as Actuarial Lead within the Proposition team, where she was responsible for the setting and monitoring of pricing and reinsurance strategy. Julie moved to the finance team within Royal London in 2021 and assumed the role of Deputy Head of Actuarial Function and maintains a keen interest in the areas of pricing and underwriting. She's also a member of the Society's Demography Committee. Gavin Maguire, our second speaker, is Head of UK and Ireland for Life and Health Business at the reinsurer SCOR. Gavin joined SCOR in 2015 as a senior pricing actuary before moving into business development and innovation roles. Prior to SCOR, Gavin worked in a range of pricing and product development roles at Irish Life. He was a member of the Society's Life Insurance Committee from 2016 to 2022 and chaired the Society's Life Reinsurance and Innovation Committee from 2017 to 2022. Now, before I hand over to our speakers, can I just draw your attention to the disclaimer, which is currently showing on screen. We use this as a standard for all of our events. And also for the benefit of our members, we show the competency wheel. And this is a tool used by our members to plan and categorize their CPD. So now I'll hand over to Gavin, our first speaker, and I'll rejoin you again at the end for the Q&A session.
Great. Thanks, Declan, and good morning, everyone. So on behalf of the Society's Right to be Forgotten Working Group, we're very pleased to present our report today. We hope this report will be useful to all of those with interest in this important topic, including cancer survivors, consumer bodies, policymakers, and those working within the insurance industry. Today, Julie and I will step through some of the key aspects contained in the report. To start, I'll give some background on Right to be Forgotten itself, what it is and what's happened in other countries so far, a bit about our working group, our aims and how it came about. Then I'll hand over to Julie to talk about some of the data we've collected on the current experience for cancer survivors who apply for insurance and what a Right to be Forgotten framework might mean for different groups of consumers. And then I'll try and finish up with some discussion around practical and operational considerations, other products, alternatives, and further work that could be undertaken. We'll try and leave as much time as we can for Q&A, and yeah, we'll take all your questions at that time. So let's start. Declan mentioned this already, but we will see shortly that Right to be Forgotten for cancer survivors has been introduced in some countries as far back as 2016, but it really came to the fore in February 2021 when the European Commission presented its Europe's Beating Cancer Plan. And the plan aims to tackle the entire disease pathway from prevention to quality of life for cancer patients, survivors, and their carers. And Section 6 of the plan focuses specifically on improving the quality of life aspects for cancer survivors. And it notes many cancer survivors in long-term remission often experience unfair treatment in accessing financial services. They often face prohibitively high premiums, although they have been cured for many years and even decades. Through the plan, the Commission wants to examine practices in financial services, including insurance, from the point of view of fairness towards cancer survivors in long-term remission. And in the short term, the Commission aims to work with all relevant stakeholders to address access to financial products for cancer survivors. And the Commission aims to work with business to develop a code of conduct to ensure developments in cancer treatment and their effectiveness are reflected in business practices, to ensure that only necessary and proportionate information is used when assessing eligibility for financial products. And they made a specific emphasis on credit products and insurance linked to credit or loan arrangements. So Declan mentioned this in his intro, but so what is a right to be forgotten for cancer survivors? And in the insurance context that we're talking about today, a right to be forgotten for cancer survivors means when a cancer survivor applies for insurance, they would no longer need to tell their insurer about their previous cancer diagnosis, provided that their treatment had ended more than a fixed period of time ago. Or if a cancer survivor does tell their insurers about their previous diagnosis that ended more than that fixed period of time ago, then the insurer must ignore that cancer disclosure when underwriting that application. And we'll see in the next slide that the fixed period of time has varied a bit across Europe. So we believe that France was the first country to introduce an explicit right to be forgotten in 2016, and it covered mortgage protection, life insurance, plus life insurance linked to business loans. The right to be forgotten period, i.e. the period of years since treatment ended that they would no longer need to declare their previous cancer diagnosis, was 10 years initially, but it reduced to 5 years in 2022. It covered all types of cancer, and hepatitis C was also added to 2022. There was no age restrictions, but it did have a limit on the max sum assured of €420,000. And since France in 2016, Belgium, Luxembourg, the Netherlands, and Portugal have all introduced their own frameworks. And in line with Europe's Beating Cancer Plan, across all of them, the focus has been on credit-linked life insurance. The period since treatment ended has varied a bit. So as you can see on the slide, Luxembourg, Netherlands, and Portugal all have a right to be forgotten period of 10 years, but Belgium reduced theirs to 8 in 2022. Across all the countries, the period for adolescent or childhood cancers is 5 years. And the focus has primarily been on cancer and cancer survivors, but like France, Luxembourg added hepatitis C, and Portugal has added cancer or other mitigated chronic diseases. But as it's fairly recent, it's not quite clear what exactly diseases would fall into that definition just yet. In 2022, France went a step further and removed ability for insurers to carry out medical underwriting on life insurance linked to credit arrangements where the sum assured is less than 200,000 and where the term of the credit arrangement would end before the person is age 65. So once someone met those criteria, the insurers would not be allowed to ask any medical underwriting questions. When it comes to the right to be forgotten period, there is some additional variation within disease and cancer types in France, Belgium, and Luxembourg, where shorter periods apply for some specific cancers or illnesses. So for example, in France, the period for which a consumer has a right to be forgotten is 3 years for stage 1 testicular cancer and 1 year for low-grade breast cancers in situ. And another difference in other countries is that in France, Netherlands, and Luxembourg, the onus is on the consumer to determine, based on guidance from the insurer, whether they need to decline their cancer diagnosis. Whereas in Belgium, the applicant must declare everything, but the onus is on the insurer to determine whether it can be used or not. And other countries have developed less formalized approaches. So Denmark has a voluntary code, and in the UK and Sweden, insurers have voluntarily agreed to explain to a consumer if they decline to provide cover or terms have been varied due to medical reasons, why they have done so. So clearly a varied picture across Europe and a lot happening in the space. And in fact, as we were working through our work last year as a working group, we could see the picture was changing all the time. So what has happened and what's proposed in Ireland? So in October last year, a bill was brought forward by the Oireachtas Cross-Party Group on Cancer. And this bill means that a person seeking access to financial services would no longer need to declare their cancer diagnosis 5 years after finishing treatment. And we note this morning that Insurance Ireland came out with their own proposal for a right to be forgotten framework with around the 7-year period. So last year, in response to activity that was happening in the space, the Life Reinsurance Innovation Committee that Julie and I both sat on formed a working group in May 2022, following an open call for members and volunteers to be part of that group. And a big thank you to all the members of this group for their hard work over the last few months in particular. And I'd especially like to thank the members of the underwriting and claims communities who joined the group as subject matter experts. Their contribution was really invaluable. Declan has mentioned some of the aims of the group already, but it's worth just having another moment on those before we kick off into the main meat of the presentation. I suppose when we convened initially as a group, we had a good discussion around where the society as an independent group representing the profession could add value to the discussion, and we agreed on these 4 aims. So firstly, explore the advantages and disadvantages to consumers and groups of consumers of implementing a right to be forgotten framework in Ireland. Julie will go through this shortly, and it's set out in section 5 of our report. Secondly, understand the current position and experience for cancer survivors who apply for insurance today. And this is probably where we've had the most success in collecting some data and is summarised in section 4 of the report. Thirdly, summarise the frameworks already implemented in other jurisdictions, which I've just gone through in the last few moments, and as well as any observed or expected impact. So given the implementation of the countries have been fairly recent, we've been less successful in collecting data on the impacts in other countries, and we definitely recommend that further impact assessment be carried out. And finally, given the Society's role in supporting actuaries throughout their career, the aim was to produce a list of practical and operational things actuaries and all stakeholders may want to consider should a right to be forgotten framework be introduced. Given the original focus of Europe's Beating Cancer Plan and the timing that we kicked off our work in sort of Q2 last year, we focused our analysis around cancer and individual life cover in particular. So I'll hand over to Julie to talk through some of the data we collected from a consumer perspective.
Thanks, Gavin. So in order to try and understand the experience and outcomes for those customers applying for life insurance who've previously had cancer, we obtained data from an underwriting technology provider who works with 3 insurers in the Irish individual life cover market. This data covered applications over an almost 8-year period from August 2014 to June 2022. It included almost 500,000 individual applications for life cover, of which approximately 8,500 or 1.7% included a disclosure of cancer. We believe that given the 3 insurers make up an estimated 50% of the life insurance market in Ireland, it is a representative data set for the overall life insurance market. It was also benchmarked versus a larger UK data set and observed to show slightly higher rates of cancer disclosure, which was expected based on population diagnosis rates. Hence, we've extrapolated this data to provide an estimated number of applications for life insurance cover from cancer survivors in the total market over this period of 17,000. You can also see in this table the split of disclosures for serious illness and income protection applications, which were included in the initial data set, but which weren't the main focus of our report. Moving on then to look at the analysis shows the proportion of customers who apply with a previous cancer diagnosis increases considerably with age. So for example, of the life insurance applications from those age 70 plus, 7.5% of those included a cancer disclosure, while those applying between the ages of 18 to 29, 0.6% included a cancer disclosure. Typically, the age profile of customers buying life insurance is more weighted to younger age applicants with dependents or those with new or outstanding mortgages. And according to the National Cancer Registry of Ireland, cancer diagnosis occurred before age 50 in 14% of cases and before age 65 in 43% of cases. Due to the age profile of insurance applicants overall, we'd expect a lower number of cancer survivors within the group of people who apply for life insurance products compared to the overall level of cancer survivors within the population. And then on the right-hand side, you can just see that when we looked at the main cancers being disclosed, it did appear to correlate to the most commonly diagnosed cancers as per the National Cancer Registry of Ireland. In considering how long ago treatment ended for those who do disclose cancer, unfortunately, we only had data on whether treatment had ended for about 25% of all cancer declarations, which equated to roughly 2,500 applications. It's therefore a relatively small data set, but the distribution of disclosures by years since treatment ended was benchmarked versus the UK data again, and the distribution was seen to be consistent. So if we consider those who disclosed treatment had ended more than 10 years prior to their application, we can see this equates to around 35% of the 17,000 estimated total applications disclosing cancer, or approximately 6,000 applicants who could be impacted by the introduction of a 10-year right to be forgotten framework. And then 63%, or just over 10,000 applicants, could be impacted by the introduction of a 5-year right to be forgotten framework. To understand what questions customers are asked during the life insurance application process, we carried out a review of the publicly available application forms used by the 6 insurers offering life insurance products to individual retail customers in Ireland today. And the key observations from this piece of analysis were as follows. All 6 insurers ask about previous cancer diagnosis on a no time limits basis, i.e. have you ever had cancer? Some companies do not ask specific questions about lower grade cancers, for example, a specific tumor or cancer in situ question. For previous diagnoses, which may lead to an increased cancer risk, for example, cysts, breast lumps, polyps, changes in moles or freckles, abnormal smear tests, etc., most insurers restrict the time period over which customers need to tell them about these problems to within the last 5 years. And for some diagnoses which may lead to an increased cancer risk, such as unexplained weight loss or persistent cough, the time period is typically restricted to within the last 3 months or limited to asking about current issues. As mentioned at the start of this section, the data referred to in the report was obtained from an underwriting technology provider. And these underwriting technology providers typically develop and maintain automated underwriting engines, which are used by the insurance companies. These are essentially application forms supported by underlying rules which correlate to the company's underwriting manual. The underwriting engine aims, where possible, to provide an immediate underwriting decision based on the information provided in the application form. So for our approximately 2,500 applications with the cancer declaration and details at the time period since treatment ended, we can see the following automated underwriting decision profile. And we can see from this table that the majority of these applications are referred to a human underwriter for individual consideration. The remainder are postponed or declined, with a postponed being more likely where the treatment has ended more recently. So in an attempt to get a better understanding of how a right to be forgotten framework may impact cancer survivors, the available data was recalibrated to ignore the positive answer to the have you ever had cancer question and provide the revised underwriting engine decisions. And this shows that between 5 to 9 years post completion of treatment, 25% of cancer survivors would now be automatically accepted at standard rates, with a further 7% automatically accepted with an additional premium payable. Greater than 10 years post completion of treatment, this increases to 35% and 8% of cancer survivors receiving standard and additional premium rates respectively. However, more than half of cancer survivors would continue to be referred to a human underwriter or postponed or declined because they declared a number of other risk factors. So unfortunately, it was not possible to collect reliable data on the final underwriting terms offered for all cases that were referred to underwriter due to the bespoke nature and individual consideration applied as part of the manual underwriting process. As an alternative, we carried out a survey of notional application case studies with all 6 insurers offering life insurance to retail customers in Ireland for the cancer type shown here. These cancer conditions were chosen as they have the highest recorded incidence rates in Ireland, according to the National Cancer Registry of Ireland. For each cancer type, different stages of the condition were considered as part of the underwriting assessment. However, it was not an exhaustive list. We also note within the report that given the complexity of cancer and the uniqueness of each cancer survivor's experience, the test cases referring to the more advanced stages of the cancers were potentially open to interpretation by respondents as to how advanced these were. So for each test case, and there were 21 in total, each insurer was asked if they would offer terms both 5 years post completion of treatment and 10 years post completion of treatment with no extra premium, or if there was no terms available, i.e. the case would be postponed or declined. And the following two slides set out the results of this analysis for two selected cancer types. And just to note in the tables for context, the average number of new diagnoses of these cancer types each year in Ireland, and the number diagnosed under age 50 and under age 65 are included. These statistics are again taken from the National Cancer Registry of Ireland. So for the earlier stage breast cancer test case, 10 years post completion of treatment, all insurers indicate they would provide terms at standard rates. If the same test case was 5 years post completion of treatment, 4 out of the 6 insurers indicated they would provide terms at standard rates, while 2 others would charge an additional premium. For the test cases at a later stage, the outcomes vary, with less insurers offering terms at standard rates 10 years post completion of treatment and none doing so 5 years post completion of treatment. For the most advanced test case, no terms were indicated as being available 5 years post-treatment ending, while 3 out of 6 would offer terms with an additional premium payable after 10 years post-completion of treatment, with the other 3 declining to offer terms. Looking then at the next example, for the earlier stage prostate cancer test cases, all insurers indicated they would provide terms at standard rates in instances where treatment ended either greater than 5 years or greater than 10 years ago. For the test cases at a later stage, the outcomes vary, with half the insurers offering terms at standard rates 10 years post completion of treatment and a smaller number doing so 5 years post completion of treatment, but the remainder would offer terms with an additional premium payable. For the most advanced test case, no standard rate terms were indicated as being available 5 years post completion of treatment, but terms were available from 3 out of 6 with an additional premium payable. 3 out of 6 would offer standard rates 10 years post completion of treatment, but the remaining 3 out of 6 would continue to decline that most advanced test case. And to provide some qualitative insights, in addition to the data-driven insights we've already mentioned and presented, we spoke with 2 brokers from 2 separate, relatively large brokerage firms to try and get a first-hand view of their experience of the application process for customers who have previously had a cancer diagnosis. Some of the points noted during our discussions included the impact of extra premiums, as oftentimes customers will have a set budget for insurance cover, and the sum assured may need to be reduced in order to obtain the overall premium that fits within their budget where extra premiums are payable. There's not a widespread understanding of what loadings mean and why they are applied during the life insurance application process. So someone receiving a loading of 100%, for example, can struggle to understand this, as they won't usually believe they're twice as likely to die as the average customer. There's not the appreciation that these are small numbers to begin with. And discussing a customer's history of cancer or family history of cancer is a particularly sensitive topic. Relative to other conditions discussed, it has that additional element of being beyond our control that makes the conversations that bit more difficult. Although we referred to the exemption that can be applied to the mortgage protection requirement within the report, a customer may nonetheless wish to have the protection cover in place, even if that means paying a higher than average premium. It's obviously a very small sample size, and these insights shouldn't be considered as being representative of the broader advisor market, but we nonetheless found it to be a useful exercise and suggest it could be beneficial to undertake a broader piece of advisor research. So in sum up what's been presented in the last number of slides, we can note the following. An estimated 17,000 cancer survivors have applied for life insurance cover over the almost 8-year period analysed. An estimated 10,000 of these applicants declared they ended cancer treatment 5 or more years ago. The data from the automatic underwriting engine shows that cancer survivors do not get an automatic acceptance decision at point of application or sale, but instead are primarily referred to a human underwriter for further assessment. The reason for being referred to a human underwriter might not be solely due to the cancer declaration, as other conditions may be disclosed which also require consideration. Unfortunately, it wasn't possible to collect reliable data on the final terms offered for all cases being manually underwritten, but it does appear from the survey of case studies carried out that offers of cover are available in the market for many cancer survivors. However, that does depend on the type and severity of the cancer and the duration since treatment ended. As noted by Gavin and Declan at outset, one of the key aims of our working group was to consider the advantages and disadvantages to consumers and groups of consumers of implementing a right to be forgotten framework. So in order to do this, we set out what we saw as the potential implications of the introduction of such a framework for consumers who have previously had cancer, and also the potential implications for other consumers. So considering firstly cancer survivors who meet the criteria to have their cancer status forgotten or ignored, life insurance products will likely become more affordable for some cancer survivors. For other cancer survivors, the cost of their life insurance may not change as they're currently being offered standard premiums. However, the application process may be improved, for example, through reduced numbers of questions and evidence required, or through obtaining an automatic decision at the point of application or sale. It may also help to change the perception of accessibility of life insurance, leading to more cancer survivors applying for cover. Other consumers who have never been diagnosed with cancer may see an increase in premiums if a right to be forgotten framework is introduced due to cross-subsidising for consumers who meet the criteria, and some consumers may consider this to be unfair. Though we do note the extent of any price increases is difficult to predict, as will depend on a number of factors, such as the products and scope and the time period considered. Consumers that have recovered from other illnesses or diseases may feel unfairly treated, as they would still be required to disclose their prior condition. I'm now going to hand back over to Gavin, who will cover the remaining sections.
Thanks, Julie. I suppose in our work, we noted a couple of features of the Irish market that may differ from other countries and may have a positive or negative impact on the effect of a right to be forgotten framework. And the first one being the mortgage protection requirement in Ireland, and this is not the case in all other European countries. So under Section 126 of the Consumer Credit Act 1995, a lender in Ireland is required to make sure that a borrower has mortgage protection life insurance in place before granting them a mortgage. However, the legislation outlines a number of exceptions to this. So the compulsory mortgage protection requirement does not apply if the borrower is over 50 years old, the mortgage is not in respect of their principal private residence, or where the borrower cannot get this insurance or cannot get it at an affordable price because of a serious illness, or if the borrower already has enough life insurance to pay off the home loan if they were to die. However, some lenders may still insist that a borrower take out mortgage protection life insurance, even where there's no legal requirement. Another feature of the Irish market is guaranteed premiums. Today in Ireland, the majority of individual life insurance, serious illness and income protection is sold on a long-term guaranteed premium basis. This means that the insurer and consumer agree the premium payable at the outset of the policy for the full term of the policy, which could be up to 30 or 40 years if linked to the mortgage term. And regardless of what happens during that policy term, the insurer cannot change the premium, so the consumer has full certainty of premium payable. In other countries, reviewable premiums are more common. Reviewable premiums give the insurer the right to review the premium payable in certain circumstances, for example, where overall claims or lapse experience is not in line with expected at original pricing time. Another feature is that in Ireland, we believe there's a slightly different product mix than on continental Europe. In particular, serious illness products are more prevalent in Ireland than other countries. Serious illness products pay out a lump sum benefit on diagnosis on one of a, on one of a specific list of conditions, including cancer. Sorry. So it wouldn't be unreasonable to expect that a right to be forgotten framework might have a bigger impact on these products. And there are different mixes between individual and group risk benefits between countries. And what we're talking about today is primarily individual underwritten policies sold to retail customers. Group risk benefits are typically provided by an employer to their employees, for example, death and service life cover. In Ireland, employer-provided group life cover plans with benefits of amounts of less than 1 million are typically not underwritten. And as a result, the expectation is that a right to be forgotten framework would have limited impact on group benefits or countries that have more wider availability of group benefits. There are lots of other practical considerations that are set out in our paper, and these practical operation considerations that actuaries in particular might want to consider, but I think all parties might want to think about as we look to implement a right to be forgotten framework. I appreciate these are all more a list of questions rather than a confirmation that these things will definitely happen. So if I go through a few of them now, pricing. So what will be the pricing impacts from different cohorts of consumers that Julie mentioned about? How might the consumer mix or the customer mix and insurer sees change as a result of a right to be forgotten framework being introduced? On the product side, what are the products in scope, and could products need to be product designs need to be reviewed, or what will be the impact from a reinsurance perspective? From an underwriting side, there were lots of practical changes needed to be made to processes and underwriting systems, but also some work will need to be done to define exactly what we mean by the end of treatment and to explain that clearly to customers and applicants. And how do we ensure that declarations that should be ignored are ignored? On the claim side, what will be the process to ensure that the period since cessation of treatment the customer declared was correct, and how would insurer deal with this if the customer had an incorrect declaration? And then finally, there'll be lots of reserving and financial and assumption impacts that actually we'll need to consider. These are all set out in section 6 of the report, so in the interest of time, I won't go through them all in detail, but hopefully people find it useful as a list of things to consider. I mentioned some things around products already, but as we said in this report, we focused on life cover, but there are potentially impacts on other products. And I've mentioned serious illness cover already, but based on claim statistics published by 3 insurers operating in the Irish market, the average serious illness payout in 2021 was just over €66,000, and the number one cause of claim is cancer. So as I said, it's probably not unreasonable to assume that the impact of a right to be forgotten framework on pricing of serious illness products could be more material. Group risk insurance, I mentioned, we believe the impact on these products should be limited. On travel insurance, while our focus is more on life insurance products, we've reached out to members of the society for views on general insurance products. And with travel insurance, their initial view was that the impact of a right to be forgotten framework might be limited, as they already only ask about conditions that occur in the last 2 to 5 years, typically. Health insurance, given the community rating system in operation in Ireland, we do not expect right to be forgotten to have a material impact there. However, should a right to be forgotten framework be wider than life insurance, then we definitely recommend that some further research and analysis is undertaken to prove what our beliefs or assumptions on this slide. So if the aim of the right to be forgotten framework is to increase accessibility of insurance and improve purchasing experience for cancer survivors, we considered whether there were alternatives to a right to be forgotten framework that could be considered, or whether there was ideas that could be considered in conjunction with the right to be forgotten framework to achieve these aims. And these potential ideas we came up with are set out in section 6 of the report. And they include increasing awareness of availability of cover. Could the insurance industry do more to demonstrate that they do provide cover for cancer survivors in the circumstances outlined, and do more to encourage people with medical conditions to apply for cover? In other countries, specialist financial advisor firms have emerged, whose business sort of focuses solely around people who have complex medical histories. And these advisors have built up a lot of expertise to support customers with medical conditions, but also to challenge insurers on their own underwriting decisions. And signposting services have emerged as well that allow more mainstream financial advisors to signpost customers to these services if they're unable to provide cover themselves. I suppose one of the positive things that we found from the debate that's going on is that there's a lot of discussion in Ireland around this, and there appears to be a lot of appetite across the board to improve outcomes and experiences for cancer survivors. So we wondered whether some sort of cross-sector task force could be created to tackle what is quite a complex problem in a transparent way. We wondered whether a review of section 126 of the Consumer Credit Act should be undertaken to ensure the compulsory mortgage protection requirement and the exceptions that are set out are operating as intended. And then finally, we wondered whether some sort of insurer of last resort could be considered to support people unable to obtain cover due to medical history. Again, I think these ideas may be all worth further research and thinking and discussion. I suppose as we went through the presentation, we mentioned a few areas where we feel further research would be beneficial, but in the interest of completeness, it'd be good to sort of summarize them here. So definitely the impact of how the right to be forgotten frameworks are being felt in other countries. It'd be really interesting to learn from what's happened so far. If the right to be forgotten needs to be wider than cancer, and additional analysis will be needed for other conditions and other products. So if it's big to extend it beyond life cover, then further analysis will be beneficial. Our advisor research, while very insightful, has been very limited. So a wider piece of research to better understand challenges facing life insurance customers who've survived cancer would help to inform the design of solutions to tackle these problems. And then finally, we thought that maybe some price elasticity modeling could be undertaken to understand what the impact of increases in life insurance premiums may be or may have for various cohorts of consumers. So with that, we've reached the end of Julie and my presentation. So I'll hand back to Declan to lead the Q&A. I suppose a final thought before we do that is that we really hope the report we published today is useful to all stakeholders and helps us all achieve the aims of improving outcomes and experiences for cancer survivors. I think we're very much aligned on that. Thank you.
Thanks very much, Gavin, and thanks also, Julie, for a really interesting presentation. And you could also pass on our thanks to the working group. There's obviously been a lot of work put into this. So at this stage, we can open up for questions and answers. I think our participants are being a little shy. I don't see any immediate questions, but I have one or two up my sleeve while we wait for some questions to come in. So you should find the Q&A functionality at the bottom of your screen. Gavin, I noticed that you steered away from trying to quantify pricing implications. Maybe you could just give us some flavor as to why the working group didn't look at that side of things.
Yeah, we did talk about this quite a bit in our working group, and then we kind of got to a place where we felt in a competitive market it would be inappropriate for us as a group to set a firm, this is what we think the price impact will be, or even to steer insurers towards a range. Kind of felt it was probably up to each insurer to take into account their own mix of disclosures, their own mix of business, their own view of the relative risks to come up with their own pricing adjustment. I think we all felt from a consumer perspective that wouldn't be the right thing for us to do, to set a market price increase as a group. So it was very much with competition law in mind. We didn't feel that we should or could do that. So.
Okay, thanks for that. And I suppose the key issue here is really the model of insurance. The way that insurance is implemented is either via a broad pooling of risks or a more granular risk-based approach where every insured pays a premium commensurate to their own risk. So in this case, and I suppose similar to what happened several years ago with the gender directive, where you can no longer differentiate in pricing between males and females, even if the risk analysis might suggest that you should. Do you see this kind of concept of broader pooling of risk being applied more widely than in life insurance? For example, for illnesses other than cancer?
So yeah, I think it's fair in terms of the pooling of risk point that yeah, it is another step towards a community rating, and we did talk about that in the report. And it's a kind of a trade-off in terms of that's what I think hopefully our report shows, is that there's a trade-off and benefits and disadvantages to different groups of customers of doing that, and it's whether different groups of customers would see that being fair, so and be willing to kind of allow those trade-offs happening. So I don't know, Julie, whether you think anything differently on that?
Yeah, no, agreed. I don't know that there's much more to add to that, to be honest.
Yeah, and I suppose in a pure community rating situation, as we have in health insurance, if you move it to that extent, you then end up needing something like a risk equalization mechanism in order to avoid insurers being selected against. So at some point, as you move down that road, you have to make that choice and bring in mechanisms to protect the market.
exactly. And I suppose there's different challenges in a life insurance market where the sums assured are in the hundreds of thousands versus like health insurance as well. So definitely different considerations that would need to be thought about if we were to move to a full sort of community rating approach.
Great, thanks for that. I have some questions coming in. First question is for Julie. Julie mentioned that even if we ignore the cancer question, a large proportion of applicants would still be impacted due to other risk factors. Could you maybe give an example or two of how that would work?
Yeah, sure. I don't have the the exact underlying data because it was all anonymized, so we didn't request details of exactly what the other disclosures were. But I believe it would be due to disclosures such as a higher BMI that would require manual underwriting above certain levels, or I guess just other disclosures of previous conditions such as a heart condition, or if the applicant was on medication for any other condition at the time of application.
Thanks, Julie. I have another anonymous question. Will this apply for serious illness cover, or is it for life cover only? The risk of serious illness cover claims could be significant. I don't know which of you would like to take that one.
So I can take that one in terms of the so in terms of our work, we focused our work around life cover, and most of our data was life cover data that Julie went through. I think we have in the report called out that we think it would have a bigger impact from a serious illness perspective, but I don't think it's the slightest place to say this is what should or shouldn't be introduced. I do note that this morning Insurance Ireland's proposal is for a life cover only right to be forgotten. So.
Thanks, Gavin. I have a question from Jill O'Connor, possibly one for you, Julie. Has your review emphasised the challenge on how to make the underwriting process less difficult for customers generally?
I suppose we did focus our analysis on cancer and the cancer questions in particular included in application forms. So no, we haven't looked more broadly than this at this stage.
Thanks, Julie. Gavin, possibly one for you. Would the working group agree that if a customer doesn't have to disclose a cancer history that falls within the timeline, it could increase the risk for disputed claims in the future?
Yeah, I think this was kind of one of the points I was saying in terms of how would an insurer deal with it at the claim stage to verify that the cancer disclosure was more, or treatment had ended more than the fixed period of time ago, and what would happen if someone inadvertently gave the wrong date, or inadvertently thought their treatment had ended at a certain point of time. So we need real clarity around what does treatment ended mean, and an agreement on that, and then also how we make that clear to customers to minimize that. But I think there is a chance as there'll be an extra step at claim stage where you have to verify that piece, and that, if there's an inadvertent disclosure, insurers will need to decide how they deal with that. So.
Okay, the questions are coming in thick and fast at this stage. One for Gavin again. I know it's early days for this issue in Europe, but are there any early experiences around premium rate increases or product availability challenges in other countries in Europe?
So we struggle as a group to get firm evidence. I know some of the Insurance Europe people and AAE group are here, so hopefully they will pick up that challenge for us next. So I think France are planning a review some point later this year or maybe early next year, so that'll be really interesting. So I suppose in terms of price increases, I don't think it'd be appropriate for me to say in terms of what my company might be doing in those markets.
Another question, anonymous question again, do you think more cancer survivors will apply so that the percentage of applications of people with prior diagnosis will increase?
Hopefully, I think if the right drugs to achieve its aim, then hopefully it would. So if it increase perceptions of availability and accessibility, then hopefully it will. If that's what. Yeah,
presumably there's an element of self-selection where people don't apply because they don't perceive that they'll be successful. Yeah. Question here that I'm not sure there's an answer to it yet. When is it likely that this will become law in Ireland, and what are the next steps for the government before it would become live in Ireland?
And I think that's probably a question for government rather than us, so in terms of where it goes, and maybe it's on Insurance Ireland or maybe tracking more closely than we are. But yeah, the bill has been introduced and we believe it's still at second stage in the Shannon, but when it will progress, I'm not sure.
I suppose a related question, more generally, I suppose, Julie, what would you think the next steps should be in moving this forward in Ireland, as distinct from the government?
Yeah, as we mentioned, like, we do hope this report will be useful to a number of different stakeholders. We hope that when it's been digested and some of the additional areas for consideration are looked at, there may be kind of further work that can be done by the various stakeholders to discuss this in the round and move it forward.
Thank you. We have 2 questions left. One of the speakers touched, we now have 3. One of the speakers touched on the issue of unfairness of RTBF against customers with other diseases, i.e. 2 people with the same elevated residual risk end up being treated differently. So maybe one person has heart disease and doesn't get the benefit of this process. Another person has cancer but gets, or has had cancer but gets the benefit of this process. Yeah. How do you see this panning out in the future?
It's really interesting in terms of, because I think if you look at what's happened in other countries, so it's very much starts out with cancer and then it's kind of been broadening. As in Portugal, for example, they have that other mitigated chronic diseases, which is still subject to definition, I believe. So it wouldn't be surprising to think that we might move in that same direction. And yeah, definitely is a piece around, there's a TCF question there around, why would you treat people with one medical condition different from people with another medical condition? So it wouldn't be far-fetched to think that they might go broader than right to be forgotten at a future stage, or for cancers at a future stage.
A question, I guess a question for one of our members. Is the working group ongoing? Is it possible to join the working group, as I think people would be interested in this topic, and to be part of the working group if further research is to be done?
Yes, so there's a lot of places within the report where we've called out potential future research. We haven't yet decided what we're going to do ourselves because we focused on just getting to this report point level, but I think we'll need to regroup in a few weeks' time and see what the appetite is among the group to kind of keep going and to do further piece of work. So I'm sure we'd welcome other members. So if you want to reach out to the society and they'll put you in contact with us, we'd be happy to get you involved with any further work that does happen.
Right, a practical question. Are we sharing the slides with participants?
Yes, yeah, I think Simeon's going
to be available as usual on the Society's website in the events section. Another couple of questions. Have you spoken to insurance providers in countries where an RTBF framework has been enacted? And if so, how have they responded to the legislation?
We haven't spoken directly to other insurance providers, no. So as Gavin said, we did consider if we could get some data on the impact of right to be forgotten in the countries where it had been introduced, but there didn't appear to be any reliable independent data sources for that as yet. We had, I suppose, just undertaken some desktop research on some of the countries because, as Gavin ran through at the outset, the actual frameworks introduced have been quite different. So I think some countries as an industry have struggled more than others, depending on how prescriptive the legislation introduced was. For example, whether it actually listed the diseases that were to be considered and whether they were to be forgotten or just ignored. So I think, it did very much vary from country to country in terms of how much work the industry and companies operating within that industry had to do then to implement the frameworks.
Thanks. I mean, even looking at the list of types of cancers and all the different stages of cancer, etc., it does seem that it's not just a simple process. It would take quite a bit of thinking in order to implement a framework.
And there's a trade-off between complexity, both for the insurers and for the consumer to understand it. And then you increase the number of groups that may be being treated differently. So.
We have another question which we've touched on before. Are there any implications for claims assessment or claims underwriting arising from this proposal, or is it purely focused on the initial underwriting decision?
I think that's kind of linked to the question, as you say, that I answered slightly a few minutes ago, which is like there'll be an extra thing to be verified at the claim stage. So that would potentially mean that the claim assessor would have to verify that the cancer disclosure or the cancer treatment ended more than the fixed time period ago? And if it hadn't, then what would they do if someone has inadvertently given the wrong date? So, and how would they deal with that? So definitely claims process will need to be looked at. Yeah.
And really important that customers understand what the new process is,
exactly,
so that they don't feel they've been unfairly treated under a claim. Sorry, Julie, you were going to say something.
I was just going to say that I know the data presented, we focused on the automatic underwriting decisions, but even in the cases then when we recalibrated the data to ignore the positive answer to have you ever had cancer question, you know, we did note there will obviously be some grey areas, if you like, within that as well. So it's not just a matter of it impacting the automatic underwriting journey, it will impact the manual underwriting journey as well, in terms of, you know, giving due consideration to those grey areas, if you like, to make sure that you are adhering to the actual forgetting of the cancer, and determining, you know, what is a cancer related disclosure as opposed to a non-cancer related disclosure.
Okay, a couple of final questions. One is very factual. Has RTBF been tried in the Nordics or Germany? Well, I don't think it was on the list of countries you had at the start.
So Denmark have a voluntary code of practice, so they have introduced it, but I'm not sure if the rest of the countries have. Germany, I don't believe so yet, but I suspect, like ourselves, because of the focus from Europe's Beating Cancer Plan, that's under consideration in most European countries right now, and there'll be at different stages of consideration.
Thank you. And I suppose a final question, and it's kind of a broad societal question, really. There's been a trend on some rating factors being challenged from a social/fairness perspective. For example, genetic testing, gender, right to be forgotten. Do you have any views on this trend, or what might be next in line in this area?
I think the author of that question has kind of called out the trend quite nicely in how they said it, in terms of they've listed off the things that have been considered and are limited. So yeah, I think probably the right to be forgotten for cancer. So I was talking about, we've mentioned around whether that would mean other people with other conditions would be treated fairly, and I think that would potentially be the next step of where it would go. And you know, the extreme is that we move to a full community rating position for life insurance, and that's again would warrant quite a bit of extra work to think about how that would mean and how that would work in the market.
Okay, I keep telling you I've got a final question, but I've got two final questions to go. And a very interesting question, the last one here on the screen in front of me. Any implications for smokers' premiums? Which is a strange question when you consider the impact of smoking on cancer.
I suppose that'll probably be for each of the insurers to look at how their relative mix varies by smoker and non-smoker. So if there's more cancer disclosures in the smoker pool, then maybe the pricing implications might be bigger for smokers or less for smokers. So it'll be up to each of the insurers to break it down that way, however they want to break it down to come up with the pricing impacts for various groups within theirs. We just did it at aggregate level. We didn't go into smoker and non-smoker in terms of splitting our data, you know, so we got, but yeah, it's a good challenge. And if there's more cancer disclosures on the smoker side of the book, then maybe that would have a bigger impact on smokers' premiums, right to be forgotten. Yeah.
And the absolute final question, I think this may be straying into the area of pricing again, so you may not be comfortable with this one, but I'll just ask it in any case and let you decide. Do you expect the cost of reinsurance to rise because of the additional uncertainty associated with the right to be forgotten, or would you expect that the impact on reinsurance would be negligible?
And so each insurer will need to work with their reinsurer and I agree with them in terms of what the impacts would be depending on the processes and how it's been implemented and the framework in place. I would well believe, and I can only speak on behalf of my own, that all reinsurers are looking at this and thinking about the price implications and looking at their own data to come up with what they believe the impact would be. Again, it's probably not my place in this forum to say that this is the impact positive or negative on that. Each insurer will need to talk to their reinsurer separately around that. So.
Well, thanks again, Kevin and Julie, for giving us such an interesting presentation and for answering questions in quick bullet fire type approach. We fairly fired them at you there, and thanks for addressing all of them. Just to remind anyone who has any residual questions that you should feel free to submit them by email to info@actuaries.ie. and we'll do our best to get back to you with answers. You'll be aware that there's been a press release this morning and that the report will be available with information on that press release to find where to find it. And all that remains now is to thank our two speakers and to bring our webinar to an end. I think, Gavin, you're in control of that last bit of bringing the webinar to an end. So thanks again, everyone, for joining. We hope you found it useful, and good afternoon and have a good rest of your day.
Thanks, Declan. Thanks. Bye.
Thank you. Bye.